And this is Brad Matheny. Today is the 9th of April. This is after the market. I mean, what do you say about a day like today? And, I've got a lot of questions from people. A lot of clients and friends are asking for my thoughts on this and where we're at. And so a couple of things are going to come into mind. Okay. And I'm just going to go over things with you as they're coming to mind. I've taken a look at things, but the reality is let's just put it into place. Okay. We had moved down through the excess phase peak pattern into the breakdown period, and I had marked this 550 level as what I thought was going to be our consolidation range. And prior to the tariffs, we were holding right in this 550 area, moving through a sideways channel. Then the tariffs hit on Thursday, April 3rd. So tariffs hit April 3rd, markets collapse. Okay, so now move this out of the way. And that moves us down into this big breakdown phase. Okay, and we break down into, I'm going to call this an island type of a pattern right here. Okay, so you can call it whatever you want. I'm going to call it an island. It's a breakaway. Let me try that a little better. It's a breakaway low that established our low way down here at the 480 level. Now that low at the 480 level could, as I marked back over here, play a pretty important role back out over here where my expected July lows come. So understand that we may have just seen a precursor of these low levels back over here setting up in July. And again, price as the ultimate indicator sets up a very interesting mechanic here. So we're going to come back over here. We'll move this out of the way. And we're going to try to drag this over, and I'll keep going. So we get the big breakdown. We get the island low. We set the 480 bottom, which is low, way low down here. We hover right around that 500 low that I talked about. Remember, 500, 505. And again, you go back on my videos because I've talked about all of this, how we would break down into this level, reach this potential April low, April 21st, and then roll over, reach this July low. And then I talked about how, and I'll move these over to show you, that we're going to hit this October low. And I didn't know if this October low was going to be an equal low, a lower low, or a higher low. So in theory, this low over here could be, equal to this low over here, could be a little higher, could be a little lower. Don't know. All I know is this is the major low. These two lows are the major lows that I think we're going to be looking at as real big buy zones. So again, April 3rd hits, markets collapse on tariffs. Come back in here, go down to the next line. Tariffs increase today on China, causes a lot of pressure. Downward pressure. Trump announces a 90-day pause for some tariffs. Now, as I'm reading, it's about 70, 75 countries have come to the negotiating table and didn't overreact and didn't have issues. And so he's basically moves U.S. tariff rates to 10% for most countries. That doesn't include Mexico and Canada. They have a different deal. Obviously doesn't include China. But it does. For 75 countries, it provides a very clear relief as long as they're willing to negotiate, as long as there's moving, because Trump, the way he's going to handle this is you come to the table, let's work something out that's better and fair for all parties. And again, if they screw up, if they play games, if they don't play efficiently, then Trump's going to have no choice but to just put the tariffs back on one by one. So, this is a negotiating tactic. It is going to get resolved, I believe, within the next 30 days. And it'll probably be very powerful because, like I mentioned to you earlier, if Trump can eliminate the 1.6, $1.8 trillion a year deficit that we have in spending and trade in the U.S., I mean, that's almost $2 trillion a year that, we're either spending and sending out to other countries. And like I read the article about Volkswagen, 13% of their business, global business, comes to the U.S. The U.S. is the largest buyer of Volkswagen owned products, which include Porsche and Volkswagen and others. So understand that, companies like Volkswagen do not want these tariffs. The bulk of their profit comes from the United States, and they would literally, take a big hit if the United States stopped buying their products. So now, where does that put us price wise? So, this puts it into a very interesting mode, and this is what I'm going to talk to you guys about now. This is my main chart, so we're going to take a look at it. So we had, and I'm going to try to work through these with you. We had this breakdown into potentially this consolidation zone, pretty much between this level. Actually, let me do it on a clean chart. Oops, come back over here. Come back over here, create a new layout. And tariff play, for lack of a better term. And so here we are, UGL, SPY, okay. Here's our daily chart. So let's play along. Here's our excess phase peak pattern. Rolling into this flag, breaking down into this low, setting up potentially this consolidation. I'll do that as a line instead. And then we have the island low, setting up through the breakdown. And that island low has almost been exhausted. Now, we closed today, and I'm going to show you a couple other things as we go, just below the low of consolidation. So, the reality is, guys, is that we're going to likely see either a very strong recovery back into this area here, the original consolidation zone, or we're going to see almost immediate rejection back down into this lower zone. And again, I'll highlight the lower zone here. And this is, again, price being the ultimate indicator, tells us everything. So we can see that we failed to close back above it. If we get a little relief from the global markets overnight, we could move back up into this area. And this, again, you remember that I talked about how I thought and I'll be honest with you, I thought the 520 area, and I still think that would have held, the 520 to 525 area, roughly right here, a little higher, would have been our range for consolidation right down in this area. I thought that would have been a very consolidated range, sloping downward, as I mentioned to you, kind of breaking down into this kind of a channel. Would have been the most highly likely outcome based on what was going on with the ongoing tariffs. I figured we'd take a hit, we'd consolidate, and we'd negotiate through it. Now, China, I don't make the decisions. Oh, my opinion, I'm entitled to my opinion. My opinion is China's going at it the wrong way. They're trying to operate from a position of strength, which again, I think is going to destroy their economy. And I think honestly, in about no more than 20, 30 days, they're going to be begging for some type of relief. You can't, like I'm trying to tell people, you can't lose access to the US market and still think that you're going to keep the same type of revenue. The US is a premium market. You can demand a premium dollar, premium profits, because as everyone says, the reason why I use the example of brooms in one of the original videos, brooms in Mexico cost $1 or $4 or $5 for a high-end corn husk broom. Over here, they're 19, $20. Maybe you can find one for, $9, $10, $11 somewhere. But that's still double or, anywhere from 10 times to, the low end range to, at least double the high end range. And the high end corn husk brooms are, 24, $28. So you're talking again, 500% markup in the US compared to the same broom. Go down to Mexico, you can get it for $4 or $5. It's a premium market in the United States. So you need to understand that losing access to that premium market is like losing access to oxygen for a human being. You can do it, but not for long. Otherwise, it really hurts. So what I'm going to tell you is that we're looking at the very strong possibility that if tariffs resolve the concern, we could very easily move back into this area as, let's call it, consolidation zone 1, which would be our primary consolidation zone. And this may be a precursor of the lows taking place. Or if we get into a scenario where we have moderate weakness and still arguing, fighting going on about tariffs, we could move down into this area very cleanly again on a breakdown mode, moving into consolidation zone 2. So we are still in that consolidation zone. And what I'm going to tell you is that this looks like, right here, looks like a precursor of the ultimate low levels. Okay, this looks like basically showing us what's going to happen as we move forward through this consolidation. I'll try to draw it again. Come here. As we move through this consolidation into the ultimate low, and then maybe into the October. I got to do it again. It's completely wrong. I do that a lot. So let me do this little mark. So we have our July lows. We have our October lows. So if we had stayed in this area, we would have seen this kind of roll through here into June, breaking down potentially into this low, rolling through and maybe setting a lower low over here into October. If we had moved down in this area here, we would have stayed in this channel, moving down into these lower lows into October and potentially moving down into the 400 area into July. So what we have here is an A and B type of scenario. A is if we get up to these levels and consolidate up in this area, then we're likely moving down into this 480 area as come here, mouse. We're likely moving down to this 480 area as our breakdown low. Initial move to the breakdown low, and then we might find some support. And what this does is this sets up, in a move to the breakdown low, an A B, C type of breakdown. And again, structure. It's all about structure and the pattern. Now remember, the excess phase peak pattern, if you've been following me long enough, rolls up, finds a top, flags out, breaks down below the flag, moves into consolidation, and then breaks down into the ultimate low. Normally, that ultimate low is basically 100%. So whatever you have from the peak range here, I'll give you an example, peak to breakdown low, hopefully I do this well enough, is going to be basically 100% move down here from the flag low to the ultimate low or the consolidation low here. And then, of course, another 100% move from the consolidation low down to the ultimate low. And I didn't quite draw it perfectly, but again, you get the idea. There's our flag or our consolidation. There's our flag low. So here's a 100% move from here to here. Here's a 100% move from here to here. And here's basically a 100% move from there over to here. And that's the idea of the excess phase peak pattern. The top is the first formation, which is A. The flagging is the second formation, which is B. The breakdown into consolidation, which is C. The sideways consolidation is D, moving downward. And the breakdown to the ultimate low is E, the final move. And that is the excess phase peak pattern. Now, additionally, we have now what's called the cradle pattern. And the cradle pattern is basically it rolls up, rolls down, rolls up, rolls down. Just like that. So you can see here as we roll up, we roll down, we roll up, we roll down. There's a cradle pattern. And normally what happens is as we get below this low, we will move into an extended downward trend. Or if we get above that high, we'll move into an extended upward trend. So we rallied up into this area. We got above it briefly, rolled back down, got below it. It plays out perfectly through this consolidation range. Look at this. Here's our peak. There's our low. There's our flagging pattern. There's our potential breakdown. Okay, and that happens. It's, again, part of the excess phase peak pattern is the cradle pattern. It's like this is the A part right here. A coming up to here, over, over, over. That's the same thing. That's the cradle pattern playing out in the excess phase peak pattern. Okay, so where we're at with this, guys, is this is all consolidated, but what I'm looking for now, and this is going to be a very interesting move, and that is this. I want to leave all these here so you can see. Keep an eye on the time. I'm looking for the cradle pattern. So I'm coming down here. We move here, come back up. I'm expecting a bit of a pullback, and then I'm expecting to see it come back up. Very similar to flagging, maybe getting down into this low, coming back up. But this is a big pullback. I am expecting to see some sort of a cradle pattern. Now, how do what is a downward cradle pattern? Well, it looks like this. Downward cradle pattern looks down, up, down, up. And at this point, what we have is an inverted excess phase peak pattern. There's our low, there's our pullback, here's our flag, here's our breakdown. We get below the flag high or above the flag high, we move up into consolidation. Then we get above this, we move up into the ultimate high. Same type of setup right here or right over here. It's exactly the same. It's just inverted. It's upside down. Okay, so at this point, we've got this low. And what it tells me is one of two things is going to happen. Either this is going to be a very deep low, and it's not going to potentially roll into any type of a cradle pattern. And I'll draw out what I think could happen, meaning that we're going to just roll right back up into this consolidation phase and channel right through this, moving down through the blue cycle, which is we have an April low April 21st low, and then we roll over here to like a May 8th low. So this is a very good rotation, this light blue line. And either we move back into this consolidation zone, then eventually try to break down here in June, July to that 480 level again, or we fail to get up into this consolidation zone, which is here, and we then move right back down into this mode, setting up that cradle pattern, that roll up, breakdown up. And at that point, like I said, we're either going to then roll downward, try to break down, or we're going to move upward into this zone again. So understand it. If we have another 2-3 weeks of craziness, what we're going to do, guys, is we're going to end up rolling through this lower area right down here, this lower consolidation zone, and possibly setting up a cradle pattern. If we do get immediate relief, which I think is the highest outcome right now, given the news today, is that we're going to roll right back up into this consolidation zone. That's what I think is the most likely thing. We're going to move right back up in between this 550 area and 580, 575, 580 area, and we're going to consolidate right over into here. And this zone becomes active, but this zone really then becomes our target back over here. I mean, I don't think that anything really targets this level until we get out over into this area. And that's where I think that we're going to be looking at this zone coming back into play. So this is kind of like I hate to say it, but like a hint. This is saying, hey, this is where real support is, down in the 480 area. And the secondary lower support is down here in the 420, 400 area. So this breakdown here into July is just the precursor move. This, remember, red is if we maintain this consolidation zone. So I'll make this red. And blue is if we maintain the upper consolidation zone. So blue puts us here, red puts us here on the breakdown. And then again, remember, red and again, blue could easily come down into this 420, 400 area, which I will set these up over here. This is our bigger breakdown. So ultimately, we have that 400 to 420 area giving us fairly broad, let's call it 400 to 440, fairly broad support out in this area. Now, as I mentioned to you, I don't know if this October low is going to be lower, equal to, or higher. I don't know. I mean, in essence, I would like to see it higher. I would like to see the lows stay up here, giving us a higher low, confirmation of an uptrend. It could be a deeper low. This is the deepest support level I've identified. And again, below this level, we start getting into real concern to the downside. But I kind of think we're going to hold up here, and I would know more as we get closer to it. But again, at this point, we've eliminated the threat of the tariffs for 75 nations. As long as everything goes smoothly, that threat will never come back. If it doesn't go smoothly, then we could have a problem coming back. Now, if again, we just need to see how this plays out. And I know I'm doing a bunch of what ifs, but this is how price tells us. I keep telling you guys, price is the ultimate indicator. Okay, you don't need anything else, just price. And so I can tell you right now that my topping pattern played out. Did it play out like I expected? No. Did any of my pattern systems or predictive modeling predict that Trump would come out and remove the tariffs for 75 nations? No, I don't predict that kind of stuff. Go to somebody who's got a crystal ball or tarot cards or whatever and see if they can do it. And I guarantee you they're not going to be able to do it very well either, especially in geopolitical or political stuff. But price tells me that we're more than likely coming right up into this middle consolidation area, 550 to basically 580. We're going to try to reestablish that area. And if we can't, we are going to reject and come back down into this area. Those are the only two options we have. A, move to this consolidation zone. Actually, there's a third. I'll tell you. If we can't move to this consolidation zone and stay within this range, and we fail to reestablish this zone and stay within the range, then guess what? The last thing that we have is that we have a very broad consolidation range for the next 10, 20, 30 days between the 480 level and the 580 level. And that means that we're going to have a 100-point consolidation range that's going to seem ungodly. Now, I am going to tell you that is the last thing that I expect. Okay, that would be the very last thing that I expect. Gold and silver, as if you're not aware, gold and silver are going to rip. Today was look, gold moved up almost $90 today. Silver moved up almost 73 cents today. Now, granted, 2% versus 2 or 3%. I think gold and silver continue to rip. I really do. I think gold and silver are going to make a very big move to the upside as this whole thing settles over the next 60 or 90 days. So be prepared. It's going to be really wild to watch gold rally up above 35, 3,600 and silver up above 38, 39, 40. It's going to be really incredible. Okay, let's come back over here. 26 minutes. Okay, I'm going to let it go, and I will talk to you guys later. That's my update. I wish I had more clarity, but again, I'm telling you what I see. I'm telling you what I believe, and it all depends really on what the market's going to do and how these existing tariffs play off. Remember, we're not cleared yet. There's a lot of tariffs that are still playing out, China being the biggest one. But generally, we're pretty clear right now. Okay, guys, that's it.